Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden drama in quarterly earnings reports, and today we are diving deep into American Axle and Manufacturing Holdings. Incorporated, we have got a juicy announcement about some significant financial maneuvers that are, shall we say, quite interesting to unpack. So what is the big news here? Well, American Axle and Manufacturing, or AAM. As they are also known, they are making some pretty big moves in the debt market. Essentially, they are issuing a massive amount of new debt to fund their operations and what looks like a larger business combination that they are working on. The company announced on the 19th of September that their wholly owned subsidiary is pricing a private offering of two types of notes. We are talking about senior secured notes and senior unsecured notes. This is a pretty substantial amount in total, adding up to over $2 billion in new debt. Now, let us break down these offerings. First up, they are issuing 6.375% senior secured notes due in 2032. The total principal amount for these is $850 million. This offering was actually upsold from an initial plan of $843 million, so they managed to get more upfront than they first aimed for. Then we have the 7.750% senior unsecured notes due in 2033. These are for a whopping $1.25 billion. This offering was also significantly upsized from their original plan of $600 million. So once again, they are raising more capital than initially anticipated together. These are referred to as the notes. This whole deal is expected to wrap up on the 3rd of October of this year, provided everything goes according to plan with the usual closing conditions met. So what does this all mean for AAM? This kind of announcement is a pretty standard procedure for companies when they are undertaking large transactions or looking to manage their debt effectively. Issuing new debt allows them to raise capital without immediately diluting ownership by issuing more stock. AAM is a global supplier of driveline and drivetrain systems for the light truck and SUV markets. They are also involved in the commercial vehicle market. So, these debt issuances are likely tied to major strategic initiatives, perhaps a significant acquisition or expansion plans to solidify their position in the automotive supply chain. The company's common stock trades on the New York Stock Exchange under the ticker symbol AXL. Investors will be watching closely how this new debt impacts the company's financial leverage and their ability to generate enough cash flow to service this debt. The filing also includes a standard forward-looking statement section. This is where they basically tell you that while they are providing current information, the future is uncertain. They are not making guarantees about future performance, and that actual results could be very different from what they expect. This part is important because it covers things like their expectations about the offering, the expected use of proceeds, and any business combinations they might be involved in. They're essentially warning everyone that these are projections and things can change due to various risks and uncertainties that are detailed in their other filings with the Securities and Exchange Commission. Finally, the report lists the exhibits it is filing with this update. The most relevant one is Exhibit 99.1, which is the press release detailing this debt offering. There is also a cover page interactive data file which is formatted in inline XBRL. The report is signed by Matthew K. Parley, who serves as Vice President, General Counsel, and Secretary for American Axle and Manufacturing Holdings Incorporated. Now, looking at this filing from a broader perspective, AAM is clearly in a period of significant financial activity. The upsized nature of both the secured and unsecured note offerings suggests strong demand from investors, which is a positive signal about the company's perceived creditworthiness and the market's confidence in their strategic direction. However, taking on over $2 billion in new debt is a substantial commitment. The success of these notes hinges on AM's ability to execute on their strategic plans, whether that is for a merger, acquisition, or simply to bolster their operational capabilities. The interest rates on these notes are notably above historical lows, reflecting the current interest rate environment. The 6.375% for secured notes and 7.750% for unsecured notes mean that a significant portion of their future earnings will be dedicated to interest payments. For instance, if they have to pay interest on $1 billion at 7.75%, that is $77.5 million per year, just in interest payments for that portion alone. Investors will be keen to see how this new debt structure impacts their earnings per share and their overall financial flexibility. A key aspect to consider is how this debt will be used. While the filing alludes to a business combination, the specifics of that are not detailed here. If this debt is funding a strategic acquisition that is expected to generate significant synergies and revenue growth, it could be a very positive move. Conversely, if the combination does not pan out as expected, or if the acquired assets do not perform well, this debt could become a heavy burden. The automotive industry itself is undergoing massive transformation with the shift towards electric vehicles. For a company like AAM, which has traditionally focused on internal combustion engine components, navigating this transition is crucial. The capital being raised could be earmarked for retooling factories, investing in new technologies, or acquiring companies with expertise in EV components. In terms of risks, a major one is the integration of any acquired businesses. Mergers and acquisitions are notoriously difficult, and failing to integrate smoothly can lead to operational disruptions and financial underperformance. Another risk is the ongoing cyclical nature of the auto industry and potential economic downturns which could impact vehicle production and thus demand for AAMES products. The company's reliance on a few key customers also presents a concentration risk. Overall, American Axle and Manufacturing Holdings Incorporated is making a bold move to secure significant funding. The market's positive reception to their debt offering is encouraging, but the true test will be in how effectively they deploy this capital and manage their increased debt load in the dynamic automotive landscape. They seem to be prioritizing growth and strategic expansion, but with that comes the inherent risks of increased financial leverage. Alright, that is our breakdown of this American Axle and Manufacturing Holdings Incorporated filing. What is your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.